Welcome to TradeTheNBI.com. This is John. This report is for the 14th of May, and look at this continuation has just been straight up pretty simple. And look at this, wow, from a daily back with the sign under red that hasn't taken place since, back over here beginning of the year. All we've done is broke out past this little peak, and oftentimes what will happen in that is you'll break past it, go a little bit, and then it retraces, forming that what I guess people would call that ABC kind of setup. Doesn't mean it has to stop yet. So far everything's okay, but we're reaching this point where we could see the steel and the orange meet here, and a crossover there would be a little bit more bearish. So all in all, following that rising shakeout from way back over here when we first got beautiful split right here, or what we would call that snake, where the mouth opens of the steel and the orange, with the bullish side of steel being above, and our little tongue of the shorts here staying well below zero, meaning they're just not active in this setup. And that presents opportunities to the long side, but intraday it's been healthy both directions. Here you have the NQ far outperforming, but slowing down as well. It had a little bit softer Friday, so that allowed the S&P to kind of normalize and catch up with just a fraction. But you can see its shakeout's much healthier, and interesting, you have the little bit of that crossover already took place for the NQ, so it just shows it was a little ahead of it, but we still cyan under red, and if you ever need to see those readings, they're right here. So clearly negative 267 is further south than negative 159. The rally in the euro, as expected now, it's getting to the key threshold here. We're up at the 23% and getting a bit extended. You have a new full buy setup with this, but that rising orange is going to put a little bit of softening pressure on the euro at this particular point. And then shortly we're going to expect that at least 50% retrace into it, if not a fillback of the dips to the low here. So the issues for the euro have not been satisfied, and treasuries here from a TLT standpoint, the ETF, still rising, still way outside the normalized range of what you would expect, and that's just an indication that there's still a disconnect between what rate expectations are going forward and whether or not the Fed will continue to constrict at an aggressive rate versus not. The not seems to be winning at this particular point. But again, we've had this elevation in oil that is going to trickle itself very soon into the market, because now we've had enough time that it's going to start impacting here as we move into the early summer. We can already see gas prices have elevated in certain high tax states, and that's going to not necessarily have a dampening effect, but it's certainly going to impact how things are progressing from an acceleration standpoint, and it could actually create a little bit of a jump start. But things are moving along, and this is where earnings and everything have reflected that. Plus, if there's that expectation of higher inflation, this is going to be a little counterintuitive for some people. The market has to rise to match that devaluation. So the euro dropping, dollar getting stronger, that's going to soften things, at least from a push standpoint. But we're going to have to keep an eye on that one. And of course, gold, we expect this to continue its move higher, because the broader risk trade there is going to keep moving that forward here. We have the 5K. So from the day, we started out super bullish, and then we started to get a little bit of weakness signals developing here. I like to look for broad spans between the steel and orange when I'm looking at the DOC in this particular case, and then that cross below underneath kind of marked it there. But classic DOC spread right there, big huge split open of the mouth. You have the green falling underneath, as well as you have cyan going above, making that alien inside of the snake, the second mouth. And the easy way to follow this is I usually follow the steel, because you want to see the steel cross above the red. Right there, that's usually about the point where it gets triggered, and usually you're about the end here as the steel moves above cyan, and you got to look at that point to see if you have a buy configuration. In this particular case, we didn't get the orange dip down below, so it wasn't, and that allowed for a bit more weakness until you finally did get the dip below, but at that particular point, you would be looking for your first dip of the orange, which really doesn't take place till right about here. And at that point, you're taking place with a lot of falling green and rising shorts. So by the time it clarified itself here with the turnaround, you were pretty much back to where the original close-off signal was, right at the 38%. And then it was just a slow ebb higher. We ended Friday with very bullish dip below the red line, which suggested continuation. And what happened when we opened in Hong Kong there? You could exactly continuation. So it worked out perfectly for what the expectation was. And it's nice when you get that clean setup, and if you like holding on to situations that go into the weekend, which I'm not terribly afraid of, particularly when there's soft volatility. We've seen a much more orderly market, so I don't think if you're wondering what these numbers are, what they do is these are taking the range between the high and the low of the Morganacci lines here and giving you the point value. So 16 is pretty healthy. Now we can see expanding to 19. We're all the way up to 24 now. It's just a good indication. It's almost like a Bollinger Band effect. When you get too small a range, like under 10 in some cases, you know you're about to have an expansion phase from that. The interesting part about it for me is that it also can help you adjust your risk to reward, because if I'm shorting at the 50% line here, like the program wants to, do I have enough range to really make it worthwhile going forward? And so some of those become really nice ways to gauge whether or not it's worth taking certain trades. Depends on what your risk tolerance and what your desired goal is, but to me it's always a factor, particularly if you dip below 38% here and I've only got 4 or 5 points to the bottom, then you're probably going to be a little more cautious. But taking the short up here at a 16 range, you can hold out for a little bit longer with the expectation that you're going to reach those lows simply because the range is so narrow. But now if you get 30 and 40 in the range, it gets to be a little bit different scenario. You know that you can take portions within it. So, but I'm working that with the setup with DOC and shakeout so that it will give us a little bit clearer expansion points. It's complicated. It makes the programs longer, but the reality is what it does is it just really begins to hone in, and now we've really established some clear parameters with DOC from short standpoints to recognize super strong versus ones that may capture a little bit of heat going against you. And like this particular instance here, that DOC coming in a little bit early right there with that red above zero is sometimes a difficult setup, and can be a little bit confusing, particularly within a overall rise like this. You get these dips in the shakeout that just turn around and pop back up, but we can begin to see in the extreme histogram whether or not we have red or yellow as indications that we've sort of topped out, and we had it all except for on the signal point, which sort of was kind of interesting when you look at it, because if we slide that right over there, it's one of the only two bars that don't have the algorithm extreme taking place, and that happens on a regular basis. But then you get the signal and it actually has it. That's the one that actually produces. So long and short of it, you're not going to need to know any of those details. This is going to show up as a turning point candle, and then it'll be red all the way through, and that will change the entry point. And it becomes significant because when you talk about the entry point change being here at 27.30, which instead of the break of the 50% at 22, you're talking an extra 8 points. And that's significant when I'm already looking at a setup with this program where it's literally loses 4-1 and still virtually break even with commission. So kind of crazy. And it won't take some of these other ones because it will have been in the trade from this point, looking for the zero and the turnaround buy setup, which will convert it. So it's looking good. It just takes a while. As always, though, I will keep putting up relevant charts as we come along. We're in this super bullish phase right here. Except for right now, we're reaching extreme here, -14 for the steel. That could produce a little bit more weakness, and we got a lot of positive extremes to fill back in. So if we start doing that in the pre-market and you see it lower, the good likelihood that we're going to come back up to the highs. That's how market usually likes to test what's upside resistance there, comes back a bit, and then redoes it by the time market opens. So we'll look for that to take place a little bit later. As always, trade well.